Welcome to the Property Buyble. This show was created for current property owners, people looking to purchase property, and for professionals in the industry. Hope you enjoy. Welcome back to the Property Buyble. My name is Kimberley Ackerman. I'm a buyer's agent from Trelease Associates in Sydney. Today, we're going to be talking about the private lending space when it comes to purchasing property. It's an area that's pretty untapped and something that not a lot of people talk about. So here with me to discuss this interesting topic is Mitchell Boulden from MB Mortgage Brokers. Welcome, Mitch.
Thanks for having us, Kim, and appreciate being on here and keen to give you guys some, information around the private lending space.
Yes, I'm very excited to talk about this. Now, you are a mortgage broker and you're also the director of MB Mortgage Brokers. And the thing I like about what you do in your space is that you work with a lot of private lenders, and you're not just a mortgage broker for the banks, you're also a broker for the private lending space, so to say.
Yeah, correct. So we've got a vast range of products and offerings that, again, banks are sort of limiting to, but you've got to be, as a mortgage broker, have as many things and many options on your suite or panel to be able to get deals done.
Yep.
And I think, branching out to private lending, it opens up other opportunities for clients, people like yourself, or that you get to relate to.
Yep.
And yeah, it's a different ball game, but people just need to understand it to see where they
explore it.
Yeah, that's right.
Yeah. And so today I really want to talk about not only the fundamentals around private lending,
Yep.
what is it, where does the lending come from, so on and so forth, but also a lot of the misconceptions that people have about private lending. I know a lot of people that I speak to, whether they're people in the industry or everyday buyers in the market, as soon as you say private lending, people think high interest rates, unattainable. Why would anybody do that? There's so much more to it, and it's such a amazing opportunity to explore for those that are struggling to borrow money from the banks directly. I think first and foremost, we should probably explore what is private lending, where are people borrowing from, and what are the very basic description of private lending that you could give for some of the listeners.
So yeah, if you want to keep it down to the simpleness, the word private lending literally comes down to yourself privately and again, getting the money from some other person individually. So in the basis of it, you're basically borrowing money from another individual, but it is through a company, an agency, or whatever that is, and they are facilitating the brokerage or brokering part of that. So again, there's different forms of where they get that money from or the connections from, but it can be simple as, an individual lending money to another individual and them becoming the bank per se on that loan or that deal. But there is other, funding ways where, people can pool money together and lend as a group. But the main focus, what we look at, is dealing with sort of the individuals. But again, those people don't ever associate with the other. It's sort of like a real estate agency arrangement where, they're not dealing with each other, and that's what the broker or the private lender facilitates.
Okay, so just to be clear, we basically have the private lending side, yourself as a mortgage broker facilitating between the private lenders and a possible borrower or a person looking to borrow that kind of money. These private lenders work with a range of different individuals or possibly even companies to borrow the money from them, make sure they go through a stringent process of background checks and so forth to ensure they're from a reputable source, so that an individual can look at borrowing money from another source other than the bank. Yeah,
that's exactly right. So that's where they're doing the vetting, and that's when we're deciding which company of a private lender to go to, depending on our client's needs, because different private lenders have different policies or different rules of what they're going to do, and it's going to be different for every client.
And that kind of gives us a segue into the time frame side of things when it comes to private lending. Now, private lending is obviously a short-term solution. You're not going to get a private lending for 30 years like a normal mortgage. So someone like you is very useful in that respect, because you are the mortgage broker side, you work with private lenders, and you're able to facilitate the bridge between the two of those. So could you please give us a bit of a background on the sorts of timeframes that people may use private lending for, and how that sort of fits into you as a mortgage broker working with people for that phase 2 of the borrowing side.
So basically we've got a range from 6 to 12 to 18, 24 months. So that's the period there. And I guess the better side of having a mortgage broker on there dealing with a private lender is that we can provide more comfort as well to the private lender that we've got an exit strategy or a plan. So if you're an individual going there yourself or, trying to do your own research to private lenders, your get out plan or how you pay that back or whatever that may be might not be as strong if you don't have that mortgage broker on side to be able to provide the reasons or the other options, which is getting you back to a normal bank or second tier bank and doing 3-step process. But that's the sort of time frame that, private lenders will lend on.
6 to 24 months.
And again, just depending on the client and all of that. And again, most clients want to get out of there, as quick as possible. But again, it's about their goals and what they want to get to.
Yeah, right. So if someone is struggling borrowing money from a bank or the normal avenues that people borrow money from to get a property or to achieve their property goals, they could consider private lending as a short-term option for that 6 to 24 months that you mentioned. However, then they have to look up at a backup plan of some sort, which is then sort of jumping over to a regular mortgage and refinancing after that private lending period, which is where you come in.
Yeah, correct. So that's what we try and plan out with the clients, that whether it's at 6 months, 12 months, then again on our normal mortgage broking side, that we're showing the clients that yes, this is what we're looking at maybe now, but again, this is the rates we're going to have for you in 12 months or whatever that period may be. So they're really getting to see what their costs are for the year or whatever it is and what they're going to be on. So they've got a clear game plan and strategy. They're not just getting it and then come into a position where, we've got to sell something or change or whatever it is, but we're setting out a plan for them to get them into the best possible solution and rate.
Okay. All right. So the private lending space is really just a stepping stone for people who are maybe struggling borrowing from the banks directly as a first option. And they need to look at having a short-term solution to achieve their property goals. But then maybe in, a year or two's time, they will have to look at swapping over to that normal, regular bank mortgage
that's exactly
sector.
Right.
Okay. All right. I think a big thing that a lot of people will be wondering about is the interest rates associated
so
with
they
this.
might seem a little bit daunting, but again,
it's short term.
On how you look at it, it's a business transaction. And I guess, if you're business minded or again can understand it, that it's getting you to where you want to be, that if you're going to have to wait a year or you're going to miss out on a property because of whatever reason, can't get the money from the bank, whatever it is, that's all a potential loss or whatever it is. But look, we do have rates starting at 9.5%. Okay. But again, there are different things where we can capitalize the interest. You can actually incorporate the interest. Don't actually have to make any repayments as well.
Wow.
So there is, some other bonuses there where it can cash flow people as well. But again, depending on the risk profile, if it's a very good deal, that makes a lot of sense. We do have rates starting at 7.5%, which again, significantly different. But again, it is case by case on the location, the property the property itself, and maybe the client's other assets that they have as well.
Okay. All right. Well, I think rates was a big one that people be concerned about. I know that a lot of people I speak to think that, general private lending starts at, 15, 20%, but it's not necessarily the case. It's really just not black and white with private lending.
That's right.
It's so complicated and it's case by case, risk by risk situation and person by person. So LVRs. Generally, for those who don't know about LVRs, that's the loan to value ratio. So generally for an everyday loan with a bank, you would have an 80% LVR, which means that the bank would be lending you 80% and you would have to provide 20% deposit. For the private lending space, what sort of LVRs are we working with?
So again, depending back on that client profile or the case by case, but look, 25% to 30% is more in that space.
Of a deposit.
Okay. So we're needing, 25 to 30% deposit.
So about 70 to 75% LVR.
Yep. And again, it's just a matter of one, how you look at it. If you're going to be capitalizing interest and things like that, you may be actually starting at a 72% or 73%, which over that term, by calculating and adding on, takes you up to 75% or whatever that may be. So it really depends on the specifics, but that's the range that we need. So it is a little bit different to the banks.
Yeah, but that's the average.
That's the average,
would you say?
Yeah.
And I think another thing that we should probably mention, I know that we talked about timeframes, but the other side of timeframes is actually the turnaround side of timeframes.
Yep.
So if I came to you wanting to look into the private lending thing and I had a very short amount of time to work through an option for funding for myself, what kind of timeframes are you working with clients?
So literally, if we're getting a deal from ourselves across to a private lender, we can pretty much have an answer within 24 to 48 hours of basically offer of an approval.
Wow.
Of saying, yep, that's what we do, subject to doing the valuation.
Yes.
And basically the legal documents for the loan contract. And, we do or can get a lot of deals done very, very quickly.
Yeah.
Literally settling within 3, 4, 5 days if need be.
Wow.
For transactions. So that's again another big bonus of the private lending.
That reminds me, I know that we spoke about this a short while ago, really interesting topic around the valuation side of things.
Yep.
So you and I had a meeting a short while ago and I've sort of come to you and said, has anyone ever explored the option of borrowing not against the purchase price value, but against the market value?
Yeah.
And the reason why I sort of mentioned that to you is because sometimes, especially in my profession as a buyer's agent, we find deals that are well below market value, specific opportunities for our clients where, the market value might be here. We're getting it for this price down here. Imagine being able to borrow on 80% of this price, even though they're only paying this price. And you've explored that a little bit.
Yeah.
And it could be possible, and it is possible in some circumstances. Is that right?
Correct. Yeah. So again, if we're getting a valuation done, it does have to be done from, one of the private lenders panels. But again, they're depending on them can be a wide range. So if your broker or whoever you've dealt with has maybe done some valuations beforehand, there's a potential to say, can we use those guys or can we look at that?
Yeah.
If that's on their panel, well, great. If not, but again, it's all about talking to them, and we can look at that option. Whereas, we will, or the private lender will lend off what the value is, because at the end of the day, that's what they're looking at. They're not too worried about the contract or whatever's happening on that side, because they're just doing the pure numbers on the value of the property and what their loan to value ratio is on that.
And that's so interesting to me, because in the normal banking mortgage world, you wouldn't necessarily be able to borrow. And I know I've explored it with other brokers in the past. You wouldn't necessarily be able to borrow on the market value. You'd be borrowing every time on the purchase price.
Yep.
And that's if the valuation came in on the purchase price, which sometimes it doesn't, unfortunately. So that's a really interesting topic to sort of broach, especially if there are people out there that are purchasing in special circumstances well below market value. Being able to borrow on the value, the market value, is going to free up a lot more cash for them during this process.
And again, it doesn't hurt to have that question with your mortgage broker or talk to ourselves or anything like that you can have that as a backup plan. Even if you're looking at that, doesn't mean you're going to go ahead with them or anything like that. It's a matter of having a look.
It's an option.
Having that as a second option and saying, well, weighing up your bank options, because if the bank value or whatever it is comes back lower and you're having to put in more cash, again, it could change it. And again, if you're business minded and looking at that, it could change the outcome for you and decision making process.
Very much so. And I think that's why I love the private lending space, because I like to look at out of the box options or out of the box ideas that might be a bit odd for some people, but I always think it's good to not go with the norm, but look at what's possible and what will put you in a better position going forward. So having someone like yourself being able to facilitate both the private lending section with the private lenders and the private lending brokers, and then have yourself really be able to provide that second stepping stone for people to set up that mortgage as they're moving out of the private lending space into the mortgage space after, a year or two is invaluable in my mind. So looking at those other options like the 80% and all that sort of stuff is just an added bonus.
That's right.
I think in my opinion. So normally at the end of these segments, I do like a wrap up and give people some tips on what they can do for this topic moving forward on their own accord. I think instead of that, it'd be helpful for people if we really talk about the reasons why you would look at the private lending sector with someone like yourself, for example. So I think one of the main things is really no steady income, would you say?
Yep. So again, it can relate to that you've set up a new business, or you have different entities, or
self-employed.
Self-employed, that the banks don't like it. You need a full 2 years financials. Maybe
all that
tax
stuff
is not up to date, whatever it is, just life hasn't worked out timely for you, or you found some dream property that you want to take action on and doesn't line up. That's the, sort of number one reason that serviceability not an issue, and we can get that done. And I guess, that's a big
It's a big one. It's a big one because a lot of people, they can afford to pay the repayments for certain loans, but they're just not ticking those boxes at the time for the bank. Another one really is, their credit file or their credit profile may not be as healthy.
Same thing. That again, we might be reviewing it, or again, your rates might start pushing up, or that loan to value ratio is changing anyways with a second tier bank. Anyways, that a couple or 1 or 2% more or whatever that is might not be much difference. And again, it's getting it done without any other questions. It's getting it across the line, not having to go a process that those banks could be at 5, 10, 15 business days to get the deals done and, all of that stuff. So one, the credit check and all that could also just lead you towards the private lending stuff, or your credit file might not be good. And or we know in 6 months, 12 months that credit file is going to be fine to go to a normal bank. Why go through all the process of dealing with the in-between bank? Get it done and dusted, then go fresh to a normal bank. So
and I think also just if people need funding in a very short amount of time. Short-term funding, because maybe they're a developer, for example, that needs short-term funding for 6 or 24 months to do a development and move on from that, and they don't have the history or the credit file or the steady income or any of those things that the banks normally check in order to go through a normal mortgage route.
Yeah, correct. Again, the timing of that, how quickly we can get it done, can be another big bonus as well. And I guess, people, even developers or anyone else that have been going to the banks have just obviously realized over time that it's getting harder and harder to get the money, or more questions asked, or this and that. And they know they can go through a bank process and it might not get there in the end, or again, it's dragging on. Do they go, you know what, we've got a quick fix, it's done, dusted, and then they can get it done?
So I guess, just to really summarize this whole thing, this whole segment of what we're talking about with this private lending space, it's not black and white. It has some sort of hairy parts to it that people need to explore. But I think it's an option that a lot more people should be open to. I certainly have a high risk appetite. Not everybody does. So they may not feel comfortable going down that road, but it doesn't cost anything to explore it.
That's right.
And it could provide someone with a really good option if they are having trouble through the normal avenues because of their personal circumstances. So get out there, explore the private lending space, especially if you're not sort of getting where you want to go with the normal avenues. Speak to someone like Mitch that is not only a mortgage broker, but is also in the private lending sector, who deals with private lending brokers and private lenders on a regular basis, because someone like himself will be able to set you up from the beginning to end and make sure that you phase everything out at the right time, from the private lending side of things all the way through to when it comes time for you to jump onto a regular mortgage for your property. But thank you so much for your time today. I personally learned a lot today that I didn't know prior. And I think it's just good if people can be more open-minded about the private lending space and speak to someone like yourself to see if you can help their situation, really. Well, thanks for having us. And again, the people have just got to realize that there's not always a negative out there. If the banks are saying no and all that, there's always options. You don't take no for an answer. Pay a little bit more. That's right. But again, always exhaust all your options, speak to the right people. And then you've got that executive decision to make, whether it's worthwhile or not, or again, you might have to wait and
miss out on something. It all depends.
Maybe, definitely. Yeah. All right. Well, thank you. Thanks for tuning in. Thanks for listening to this episode. I hope you've learned something today, and join us in 2 weeks' time for the next topic on the Property Buyble.